Okay, just a few of us hanging around to the end of what was a very busy day. Um, and I hope everyone did well. And the market analysis before and throughout the day served you well. Um, so let's get into it, really. The headlines essentially centered around US yields and the PMI data. Um, so we were talking about prospects of a supportive scenario for the dollar if the PMIs were significantly a significant improvement on what we'd seen from Australia, Europe, UK, etc. And they weren't. So with the yields that were already in free fall as we were starting the day, um, took another beating, and the dollar eventually caught up. All right, so this essentially has been what we were looking for, what we've been forecasting for quite some days. There were signs with these yields. I'm sorry if this chart looks a bit messy. Let me take off some of this stuff. All right. I mean, by now, hopefully, you'll understand what all these lines and squiggles are and so forth. But um, so we've been calling this retracement in yields for, well, since last Friday when we had a meeting with Yohei, and I was talking about that they were looking pretty elevated and need of a correction, and we gone and got that today. That was the decisive correction that we were looking for. So that played in very well then for our analysis on opposing pairs such as gold, the yen, the euro, etc. Um, so at this point, well, as well as the stock markets in particular, massive moves. We've got that final push out from the US 30 towards the end of the day, um, and perhaps more upside expected. So what's the outlook from here? Well, if we look at the calendar, we've got more important data on the horizon from the US, and that's where we're mostly focused. The data that came out from the Eurozone today potentially puts the ECB on hold this time around when they next meet. So that would be expected to be supportive to the euro. I mean, we got that rally, not supportive to the euro, sorry, um, a weight on the euro, but we got that rally today on dollar weakness and essentially a stop hunt. That's all it is. You've got the dump before the US, and the US likes to come back in and gobble up the money, the low hanging fruit, and it's just looking for a catalyst to do so. So that's what we got today. Um, Now, that's not to say that the dollar is going to stay down permanently, um, and in fact, with the divergence between the Fed and the ECB, you see, one thing to note is that the data in the US has actually been pretty positive, and these PMI data, they're surveys, they're not hard economic data. So the hard economic data has actually been bullish for the dollar and for the economy, and hawkish with regards to the Fed. So that's something to keep in mind. And perhaps this is a shakeout in the US dollar before the next move to the upside. So I've not been advocating a weaker dollar. I've been advocating a correction in the dollar, a well overdue correction. Um, and if this is the correction, or at least the makings of it, maybe we'll have some more follow through tomorrow, depending again on the data, in the build up to the Jackson Hole events on Friday. Um, anyway, so it's all very good, all well and good trying to predict what's going to happen. I mean, that's not what we're doing here. We're trying to build a thesis so that each day that we come in prepared for possible outcomes. And we want to lean one way, um, and have a bias, and that will help us with our conviction on our trade setups if they fall into um, the thesis that we're building. If not, if the setups are going the other way, then that's something we need to be cautious about. But that's not to say we can't trade them. So, for instance, we had a trade earlier this week in gold that was um, in contrast to the buyers for that day. So it's about coming to the desk, your screens, having a bias, but being flexible and running with what is set up on the day. So, but our bias currently is for a softer dollar, some follow through, and then um, resuming the uptrend based on central bank divergence. But obviously, it will depend now on what Powell says and what data uh, comes out. So we've got, importantly, tomorrow we've got continuing jobless claims, durable goods, initial jobless claims, and then of course the Jackson Hole commences tomorrow, and we might, I believe, I need to look into it. Um, I'll have a look into it later on today and be prepared with something for you on it tomorrow. We'll talk about it in the meeting in the New York Open tomorrow. Um, but I'm wondering if there's actually going to be a pre-release of his speech, so we need to be on our toes around that. Possibly, possibly not, or maybe we'll just get it all on Friday. We'll have to see. Um, Elsewhere, we've got um, earnings coming out for the AI industry from this company here, and that comes out after the closing bell, so anytime soon. Um, so that can have an impact on the CFDs that are running beyond Wall Street closing. So keep an eye on that for your um, trading if you're looking to trade Asia and London ahead of the US Open. Um, so yeah, so those seem to be the key events that are on tap. And then moving to the board, and let me know in the chat, guys, if there's anything in particular you want me to look at. But we'll just go over this US dollar then. So um, we've come up, come down. We've got an M formation on the chart here. That is a reversion pattern. So we've had the dump. Maybe we'll get a push up, a correction. We're about to open in Asia. Let's see how we open up. So we've had Monday and Tuesday setting us up for today. And now we're going to have, today, Thursday, setting us up for Friday. So we'll see how we get on over the next few sessions leading into Friday. Friday is obviously going to be an extremely key day, particularly volatile perhaps. So we might get some nice movements if we get some decent setups. We could really get some follow-throughs. And by that I mean trading the setup and in anticipation of an all-day trade, um, such as today. I mean, for instance, the dollar CAD and other pairs, they were real runners beyond obvious target points. They kept going. So that's typical of Wednesdays and Fridays because you've got Monday and Tuesdays order flow. And then in the US, we've got the benefit on Wednesday of Asia and London's order flow, which are footprints and essentially um, historical price action and market structure that we can lean against and come up with our theses and biases trade setups and trades, along with targets. So yeah, Wednesdays and Fridays, good days for trading on that basis. So back to the dollar, we could have this scenario of a correction to the upside. I've got there marked the key resistance, and we've taken out. Uh, well, yeah, we've broken support. Whether that's going to be a fake out for the time being, quite possibly. 80% of fake out breakouts turn to fake outs. So keep that in mind when you see these levels breaking. So we could have a correction on this, and just marking the possible points of resistance. And here seems to be a fair bit of volatility in that area. This is the 1 hour chart, so keep that in mind as well. And then put a Fibonacci on this, noting that the 38.2 aligns with that area that I was highlighting here. So maybe that could be resistance. And it's a round number, 103.20-ish. Okay, so the 50% aligns with that candle's low, and the 61.8 up in this area of ongoings. Okay, so those are key Fibos if there's going to be a retracement, and the 78.6 as well has a confluence with that low, with the neckline of the M formation. So let's see how that pans out. In the Asian session, well, what tends to happen is you get a lead from Wall Street. I'm just answering a question here. You get a lead in from Wall Street, and I can't give you a percentage, but normally you'll see Asia follow on the footsteps of Wall Street. So we had a very positive day out of Wall Street today. Risk on, considering the prospects of central banks slowing down on their interest rate uh, policy of hiking rates. So the PMIs were a disappointment in one way, but bad news is good news for stocks and risk sentiment. So let's see how that pans out on the US dollar. Maybe we'll get follow through in Asia. Perhaps that's not going to be the outcome at all, and we're just going to see a continuation. Um, as I said, we've already noted that we're breaking down that higher low before the higher high, so it's technically a breaking structure, and this could easily melt down. So it's nice to have a two-sided outlook for what could happen, eventuate for the day ahead. If you're going to be trading Asia, London, or both of them, US. So we'll just have to wait and see. The bias is weaker dollar for the moment. So these yields, we've just touched on those earlier. There's no surprise there in that correction. It's well anticipated in the last few days. Will this continue is really what we should be asking. So if we move out to the higher time frames and just try and get a gauge on what's going on. So this is the 2-year, which tends to track Fed sentiment more closely. Well, we've still got this W formation. We are in the 3rd week of rise. I would expect if this were, well, if this week were to close, maybe this week is going to close similar to the prior week. So if you look at that, you've got this hammer, whatever you want to call it, but it's a small body with a high wick, and these wicks tend to get filled. So if you've got a candle that's closed bullish, which such as this one, and leaves a long wick like that with a small body below, then you'd expect the next candle to fill it in, because all that is really on a lower time frame is a rally and a pullback. So after the pullback, you expect the continuation. So that's what's happened on this candle so far this week, albeit we've sold off today. So what I'm suggesting is that maybe we stay low into the close of this week, and then the following week we get the correction or the continuation up. So we have the correction this week, the move up next week, and then perhaps that will be the final week of a higher high, and within that week we might be selling off. Um, or perhaps not, or perhaps we close up high, and then the next week we have an almighty move to the downside. Um, Start of a new month could be the trigger for the sell-off. But anyway, so that's by the by. We're trying to look a bit too far ahead for what we've got at hand. So, but just giving you a scenario. Um, Nearer term on this hourly chart. Again, we've broken structure over here. That's bearish. Perhaps we're coming up into the breakout area, which is pretty typical. You tend to get the displacement met with a correction up back into the um, peak formation, the highs for the roll off for the downside continuation. So we might get a move up. That would play into our temporary dollar bullish outlook for the continuation to the downside. So that would be supportive of a move up to come back down. Okay. Um, right, I'm being asked here the bias. Okay, let's look at Euro Oz. You're asking Euro AUD. Right, let's have some interaction here. What do you think of? What is your bias on Euro Aussie? Person who's asked this question, I'd like to see what your bias is, and let's have a look at it. While you're giving me that, I'm just going to scroll out to the longer term charts and do a top down analysis. And feel free to right away and let me know what you're thinking about this pair. What are you thinking? What are you thinking? Have you got any bias on this? Right, so on the weekly chart, I am seeing that the price came in after that peak high, came in to try and, well, to test the higher low, and it failed. So this was a weak high. This is a strong low because it's led to a higher high. Okay, so that's an important level to the downside, and that gives us information that perhaps this market wants to continue higher. It's taken out this area of resistance. Now, remember, um, most breakouts fail. So, what are we expecting? We've got the breakout. Perhaps we're going to get the failure, which we're seeing. We're seeing a correction of this bullish impulse. So we got this left hand shoulder, head, right hand shoulder. So these are bullish um, pattern. So it's an inverse head and shoulders, right? So we should make it green for bullish. We can, but we've already seen the breakout, haven't we? So that was a bullish scenario. So that candle there was a breakout candle, and subsequently we got 2 weeks of rise, and then the third week, that power of three coming into play again, crashing down into longs, and that has potential to come lower. So if we just mark what we might find as support around here, a bit lower down as well, where this origin is, probably in here somewhere, there will be orders resting, potentially to support it. So moving down to the daily chart, well, there's the order block that I was referring to. So price could quite easily come into here as well. If we just put a line around about 50% of that box. So in order for us to have conviction that this is coming down, what do we need to see? Well, we've got a topping pattern, we've got the M. Okay. Are we breaking any structure? Not quite. So this is the low. So far we can't really determine that we are correcting this bullish impulse. I mean, we are correcting, but it's officially still, until it breaks this level, officially still within an uptrend. So until then, now having said that, shorter term, you can argue that we have had a break of structure. So I'm sure on the 4-hour chart, so we had a higher high and then a higher low, and then a break of that higher high in here, and then a higher low, and then a higher high, higher low, and then a lower high, another lower high, essentially all the one thing. Okay, so all of that is resistance. And then we came down to break these structures. Break this structure here. So we are in a broken down market as per this section of the rally. So I would argue that we're still front side of this and this could well act as support, and we can continue higher. But we certainly are breaking down this here, all of this. So I'd be of the mind that perhaps we're going to find support in here and move back up into the broken down structure, potentially, and perhaps the nose of the M formation will act as resistance in and around here, 169.20, and that could give us the fuel to come down and take on this trend line, and then this support, and so forth. So in that regard, keeping an eye on what happens over here and this support at 67.38. But if we're faking out, then look for bullish structure to come back up and take on this trend line. So a potential break of that trend line to build up and come up into the peak formation as described. Okay, so that's what I can give you on Euro Oz for the moment. Sterling and Sterling Oz. So cable. Start again. So we've essentially moved back up into the displacement, testing this congestion area. Impulse correction, perhaps a downside continuation. Depends on the dollar. It looks to me that this is a broken down market. Having said that, we've come right into last week's lows already. Well, let's go the other way around. So perhaps this was a failed breakout for the continuation to the upside. What do we have down here that's significant? Perhaps we'll see a correction in line with our meanwhile bullish thesis for the US dollar, and maybe we'll see a correction into this here. What does that look like on the 15-minute chart? Yeah, perhaps this block could offer support. So maybe that will offer support. Or maybe not, maybe it will blow straight through. Just a thesis that we're building here. So correction, continuation could be the scenario. What was the other one you wanted me to look at? Sterling Oz. Sterling Oz. Yeah, so I believe that you are the person that gave us that trade setup tip yesterday. So thank you for that. I tend not to look too much at those crosses, but considering I don't trade in Asia, but it just looks so juicy. I put on an order. Uh, well, no, in fact, I sold it with a large stop. I was out last night, football engagements. So and I just left it, and I didn't even look at it until coming in this morning, and it was running a nice profit. So nice one, well done for that. The market was rising, three levels of rise, consolidating, blow off. So that is a textbook setup scenario. Those are the types of setups I wish we would see more often, but they occur a couple of times a week. And as I said, we get Monday and Tuesday building up for us, and then last week as well is useful information. So this was a setup that occurred over a number of days, and you're just sitting in your hands and letting it play out, and then you get the easy money trades such as that. So where do I think it can go from now? I think it can continue lower, um, but I don't like to hold things overnight. It's not my style. I don't like to hold on to things. So, um, but let's see what the prospects are. Right, we've got this M formation. Um, let's put this onto a cleaner chart. So here's the M formation. Very strong impulse though, so I'm not presuming that that's just going to stop here and correct, but eventually it could do. So bear that in mind. So we've got the M formation. So prospects of moving up into the neckline. Where that might happen from, perhaps a little bit lower. Maybe we're going to come all the way and then correct. So all the way, I mean by this is supportive areas. These are supportive areas. So in here, so this could easily come into here. Are we seeing any signs of deceleration? Not really. Although we've already come into this top of that order block, so let's bring that out up to here. So, I mean, this could come into where? 195.60-ish, 70, 50, perhaps. Maybe it's got some juice left in it. If it hasn't, then look for the correction and then a continuation. So maybe that's what we need to see. Maybe that will be visualized better on an hourly chart then. So perhaps what we'll get, if we're going to get a correction, is, well, let's stay to the 4 hour, draw our fibs. And we can come back onto the hourly chart and see whether these fibs marry up with any of the structures. So the 38.2, 197, so a retest of 197 could be on the cards if this is going to correct. So up into this order block area. So perhaps coming up into here and rolling over towards our 195.60-ish target. Having said that, obviously there's resistance here at that wick, and those wicks at the top. So maybe we're just going to get the continuation. Um, one, two, maybe a third push lower, and then to come up. I don't know if that's helpful. Right, so any other questions, guys? I think we've covered pretty much what we need to cover. Let me know if you want me to look at anything in particular. I mean, to be fair, we haven't really looked at anything and looked for any setups, but we've got quite a bit of time until the US session opens. But I don't know if anyone's going to trade Asia or London, and you want me to particularly look at something for the forthcoming sessions, or if we'll just wrap it up and then tomorrow morning, when we've got information from Asia and London, we'll be able to assess the markets in accordance to being at our desk, ready to trade, rolling up our sleeves for the US session. Gold pullback during Asia question mark. Let's have a look. Right. So again, starting from top on the weekly chart, let's go as far as that. So perhaps we're building up a correction, an ongoing correction. We've got this to hit on the upside. Um, let's do a figure on this as well. So we're yet to come up to the 38.2 that aligns nicely with that wick on the weekly chart, 1925.84. Then on the, just go to a different chart for a second, I want to check something. I'm wondering whether that candle there is reflected on other charts as well. So when was that? That was on Friday. What was Friday's closing candle? Yeah, okay. So it appears to be a bullish candle close down low. So we've come up into orders on that candle itself, 1920. So that was the line in the sand. Can't speak. The line in the sand that we were talking about, I believe, in the meeting this morning, as well as throughout the day when I was being quizzed on gold. We were talking about that being an important level that opens up and move up into 132. On the 4-hour time frame, this impulse is decelerating. Got a very wonky W. I'd say the support therefore is here. If we were to draw our Fibo, I almost want to forget about that candle. Let's do it on the 1 hour, because I was going to draw it from here, and that aligns with that 1905 area aligns with the 61.8. If we were to draw the Fibo from bottom of that rally, bar that candle, then we still have a confluence around 1905 and that area with the 50%. So either or. Now, if we were to pull back only to 1908, does that tally up with any structure? Yes, it does. In the hourly chart. So that could be a support as well. So they have it essentially, I call in here. So 1908, 1904 as key support area. Okay, for the correction. Now, it doesn't mean that it has to correct down there. That's just a thesis that it might do. And then on the hourly chart, we actually have, depending where we put off Fibbo, so if we put it there as the start of the up move, we've got aligned 61.8 and the 78.6 on the hourly retracement. But bear in mind that it could stall just as easily at the 38.2, the 50% mean reversion as well. So it's just useful having this as a guide, and then if you start seeing the price come into these areas, that's when you watchful for any signs of deceleration on the correction, building bullish structure, breaking structure, retesting the structure, displacement out of that structure, and that's when you start really your ears pin up and go, right, this looks like this correction is done and we're heading higher. So keeping note of those areas would be useful. And then in that respect, you're looking for a break of 1920 and continuation through. I mean, there will be opposing structure looking left. I think 1924, there was a level that I regarded as important, guarding a move to 1932. All right, so we'll go to dollar CAD. So dollar CAD is correcting with the W formation down low. So neckline is eyed down here. That is on the weekly chart. And then drawing the Fibonacci on this, bottom to top. We've got the 38.2 that aligns with it, more or less, some 15 pips or so, 20 pips. So that is a target area for sure. And then that's not to say we'll go there, but that is certainly a possibility. It's a high probability that it could come into there. And then we've also got daily support noted somewhat higher. So that could offer some support on the way down that area. If we were to draw the daily Fibonacci, daily charts Fibonacci, from that candle low to the high, we've got a 78.6 in and around 134.50 for a nearer term target based upon that order block that where the impulse took off from, that blue candle. So in and around there is also a supported area. And then, so take note of those because I'm about to, well, I'll take away them. I'll leave the levels on, but trying to clean up the chart a bit. And we'll go to the 3-day cycle template, and we'll start looking at what we have in terms of structure, price action, the behavior of price at the moment. Okay. Right, so we've been breaking structure to the downside. Um, yeah, this is what I meant by an all-day trade. I actually took my money off when I was done and dusted at 135.50, but this just kept going, and it came into the prior day's lows. No, sorry, not quite. So on the downside, we've got Tuesday's low as a target, and then Monday's low, the opening balance range, as a target on the downside. So this is also looking nice for a continuation, because similar to your sterling Aussie trade, sterling New Zealand, it's a very similar scenario. We've got the uptrend, consolidation, peak formation, failed breakout, break of structure, bearish market. So I'll just be wary. I mean, we've already had a pullback. But anyway, so for the day ahead, perhaps we're coiling here for a move lower, continuation lower. But don't be surprised if this market comes up above the highs, because there's still a fair bit of displacement here for the market to move up into. The price imbalances, so the market can come back up, fill a portion of it or all of it, maybe just a portion of it, because this is a broken down market. It's taking out stops on the upside, and it still needs to come in, and there's bound to be money down here, stops below here, below here. So perhaps we're going to get that correction in the dollar that we were talking about, an upside correction perhaps, and that could feed through to dollar CAD. And then if we get that correction up, maybe to test the highs, maybe a break, but I'd be looking for a short. This was the first red day out of a series of many green days. So maybe a downside continuation, day one, day two continuation, and then consolidating into the Jackson Hole. So that can be on our watch list. Right, I'm going to wrap this up then with Aussie Swiss, and we'll call it a day. W formation, downside correction, break of structural point here, 56.76. We'll just have to see on that, but essentially we are on the backside of that once bearish trend, and perhaps we're coming up into these shorts. We might need to see a correction and a continuation. So maybe a bit lower, fill the price imbalance, and continuing higher into last week's highs. And above those there will be stops, and so forth. So this has potential to keep on going. maybe not this week. Maybe I think a fair target would be somewhat above last week's highs. All right, guys. So well done for everyone that nailed it today, and see you back tomorrow. Rinse and repeat. Looking for the setups, building our bias, getting 1% better every day, as one of my mentors says. And let's see what comes out of this uh, scenario with yields and the dollar and the data. So it will be an interesting day ahead. Cheers, guys. Have a good one.